Hi guys, how are you? This is Teacher Party. We are continuing with the conceptual framework. So we are looking at how income is defined according to the latest conceptual framework, which is the 2018 version. When you are tested, ladies and gentlemen, you have to reproduce this one. In your exams, in your tests, you have to reproduce the 2018 version. It's very critical. So you might be finding, the reason I'm saying that, you might be going through your university repositories or libraries and getting all question papers, and they have another definition of income in their old 2010, 2013, 2017 question papers. Don't adopt that one. Even though the question does not change, use the newer version of the conceptual framework. Okay, guys, let's dive into it. Don't forget to like, subscribe, hit the notification bell so that you can get any updates on my new uploads. Okay, so we're saying income. Definition of income is increase in assets, or either your assets are going up or your liabilities are going down. So it means decrease in liabilities. So let's start from scratch. Increase in assets or decrease in liabilities other than those relating to contributions from holders of equity claims. So let's go on to explain that. What does increase in asset mean? Okay, guys. You know me and my Mr. Price. You know me and my Mr. Price. I like explaining things at a Mr. Price level. So this is page 14. Just want to show you something here. Okay. Let me minimize this. This is the lady I'm looking for. Okay. So you do know the goods that Mr. Price sells. Well, they don't sell the human being. They sell the accessories, the person, and the clothes, né? Okay, so they sell jewelry, they sell cell phones, they sell chairs, Mr. Price Home, they sell clothes, okay? They even sell lipstick. I'm one of their fans in buying lipstick and mascara and makeup. So they sell those things. Okay, guys. So when they sell, let's say this top, they sell it for 40 bucks, ne? 40 rands, ne? It's either you walk into the, I always say this, either you walk into the cashiers to pay cash, give them the 40 rand, you losing the 40 rand, Mr. Price is gaining the 40 rand. So when Mr. Price is gaining the 40 rand, their cash is increasing. Cash is an asset. Or you walk into their counters to pay for this top, just go on a journey with me mentally for us to imagine this so that it makes sense to you. You got your bank card, let's say Capital Card, still a student, you're walking over, you're paying for this top, you're swiping, okay, with your debit card or your credit card. So money comes out of your bank card or your facility, it goes directly into the bank card, into the bank account for Mr. Price. So the bank account, which is still an asset for Mr. Price, increases. Or you say, you know what, Mr. Price, let's be friends. Mr. Price, have these things. Let's be friends. Give me this top now. I need to go to a party. It's a Friday. I'll pay you next month. And Mr. Price says, friend, I got your back. You will not be underrepresented in that party. Take the top, pay me when you have the money. And then you sign the contract of how you're gonna pay for this top whilst you're wearing it, instant gratification, first years. But anyways, when you're taking now this top and you're gonna pay for it, I was tempted to say top. So when you buy this top and you're paying for it over a month or two, ladies and gentlemen, you're already in the cycle of credit. So you are a debtor to Mr. Price, and we know debtors are the people that owe the business money. Okay, so, and we're saying also income can be the decrease in liabilities. Okay, so a decrease in interest-bearing liabilities imply that after a company has paid back the debt or what it owes to the bank, then the interest as a consequence will decrease. Let's come back here. Okay, you see, Mr. Price has finance costs. Finance costs, these are costs incurred to service debt. Ladies and gentlemen, always remember that these are costs incurred to service debt. So if Mr. Price did not have any debt, let's just check, do they have it in the statement of financial position? They have. Okay, current amount owing on consolidated entities, current portion of the lease liability, derivatives, derivative financial instruments, reinsurance liabilities, lease liability, post-retirement medical benefits. So, guys, these people have debts. Ne? So I don't want you to be funny towards Mr. Price now. Thank God they've posted their financials so that we can use them. So Mr. Price does have debt. So if Mr. Price paid all of its debt, like you would not have anything here, as a result, you will not pay any you will not have to pay any finance costs. So this is what this line refers to, decrease in liabilities. So the moment an entity pays its long-term debt, short-term debt that is interest-bearing or that has any transactional costs attached to it, when it's settled, when it's paid off completely, then there is no additional expenses that the statement of profit or loss, I almost said the wrong word for statement of profit or loss. There is no additional item that needs to sit on the statement of profit or loss to eat or to reduce the profits for the business. You see, so here Mr. Price has 477. If they did not have debt, they would not have minus 477. It will just be a nil here or a zero. So Mr. Price will be reporting not 3.6, it will be reporting at like 4,000, at like 4 million something or 4 billion something, depending on the currencies. But these financial statements are prepared under. Okay, so the last one says, other than those relating to contributors, other than those relating to contributions rather from holders of equity claims. So income, okay, sorry, this has to do with rather capital. Much better. Okay, so when it says other than those relating to contributions from holders of equity claims, it just talks about the money. It talks to the money that the owner is investing to start the business. That's what it's talking to. The equity holders, the contributions by equity holders is the capital. It can be the owner capital, it can be shareholder capital. So this is what is making reference to. And this is the end. I hope you never struggle, guys, to remember what income is. Thank you. Bye.